Did you know that the IRS has given retirees an extra $6,000 this year, and that you might now have until age 73 or even later to start your required minimum distributions? There have been some important updates to the tax code for 2025, especially for retirees. And if you're not aware of what's changed, you could end up leaving thousands of dollars on the table. In this video, I'm going to walk you through what's new for 2025 and how these changes might affect your retirement income, tax planning, and estate strategy. Let's start with required minimum distributions, or RMDs. If you haven't started yours yet, the age to begin RMDs is now 73. That came out of the Secure Act passed a couple of years ago. It's now fully in effect. Now here's the key. If you turn 73 this year, you'll need to take your first RMD by April 1st of next year. And then your second RMD is due by December the 31st of that same year. So in the first year, you may have two withdrawals that both count as income, which can affect your tax bracket, Medicare premiums, and more. And if you accidentally miss an RMD, the penalty used to be 50% of the amount you didn't withdraw. But now it's down to 25% and 10% if you correct it quickly. Neither is a good option. This gives retirees a little more flexibility, but it also means timing is everything. One of the most talked about provisions this year is the new senior standard deduction. Now, if you're 65 or older, you get an additional $6,000 off your taxable income, or $12,000 if you're married, filing jointly, and you're both over 65. And here's the kicker. This deduction applies even if you itemize, which is a major change from the past. It's designed to provide relief for seniors living on fixed income, and it's available from 2025 through 2028, unless, of course, Congress changes it. But heads up, there's an income phase out for high earners. If your income is above a certain threshold, that extra deduction may start to shrink or disappear. So now's a great time to review your income sources like Social Security, RMDs, and investment income to see how that all adds up. There's also another major change in the estate tax rules that could impact your legacy planning. Starting in 2026, the federal estate and gift tax exemption will be permanently increased to $15 million for single filers and $30 million for joint filers. That's significantly higher than the old limit, and it opens the door to new planning strategies, especially for those with larger estates. And the good news, the step up in cost basis at death remains intact, which will help you reduce capital gains for your heirs when they inherit the assets. If you've done estate planning in the past, now is a good time to revisit those documents and ensure that they align with these new exemption limits. Now here's a quick update for charitably inclined retirees. The limit for qualified charitable distributions from IRAs has increased to $108,000 in 2025. And you can do a one-time $54,000 QCD to a charitable trust or gift annuity. Great if you're looking to combine philanthropy with income planning. There's also talk in Congress about indexing capital gains taxes to inflation, but nothing's passed yet. I'll keep you posted if that changes. These updates are good news for many retirees, but only if you know how to use them. So here is what I would recommend. Number one, review your 2025 tax resources and how they stack up against the new deductions. 2, if you're nearing retirement age 73, plan for RMD timing now, especially if you'll have two distributions in one tax year. And if you haven't revisited your estate plan in a while, it's a great time to do it. If you'd like help applying any of these rules to your retirement plan, go ahead and book a free consultation with me using the link in the description. And if you found this video helpful, please like, subscribe, and share it with someone else who's getting ready for retirement. Thanks for watching. I'll see you next week with another tip to help you retire smarter. Together, we can put your retirement on cruise control.